Good morning, Paul. You've come back to 2025 with a bit of momentum, announcing a very successful capital raise. Talk me through that.
Well, that's right. Look, it has been a good start to the year. The PFS announcement is coming out during March, and we want to follow that up with some very focused discussions with strategic investors, but also do a couple of the key longer-term critical path items for the feasibility study around the port and road engineering and access. So the capital raise was announced in the last day or so, 1.3 million raised from our inner placement, from our sophisticated, top 20 or so investors. The other good thing is we have two new contributors, two new shareholders in AKORA. Firstly, an Australian institution, which is fabulous, that liked the story and wants to see the continuing news flow, but also improvement in AKORA's progress, and an iron ore participant who has been following us and has been in the data room and doing discussions with us in terms of our strategic investor. So two new, very good shareholders, along with our very supportive top 20 or so shareholders who contributed to the 1.3 million raise, which is fabulous.
And it's probably worth saying that the AKORA board and management has also dug into their pockets to support the company, which is obviously a great reflection of your confidence in the project. But let's stop and unpack the capital raising. The signing of an institutional investor in this market where money has been very hard to come by, particularly for small cap explorers, it's certainly a significant sign. Not many small cap explorers get the support of institutions.
No, very true, Gareth. Thanks for reminding me about the board and management. Yes, that is important, and does show the dedication of the board and management to the project and the ongoing story. The institution is a fabulous get. Talking to them for a little while now, and yes, in the capital raise they've come on board, and we'll be following the story closely, as you can imagine. No, a really good positive sign.
And what did they share with you why they made the investment?
It's really around the PFS about to be released, and then the strategic investor process following that, and the potential uplift that should happen with that ongoing success and completion of those activities.
The iron ore industry participant, also a very big win.
Very much so. Look, it's a company that has been investing in iron ore projects, has a good track record of developing and bringing projects online. So again, it means that they've evaluated Madagascar, with the progress that's been made there by the government, but also by other companies in recent times. They see Madagascar as a place where they can develop a mine in partnership with us, if that does come to fruition over time, but also potentially a good partner that has first-hand experience in developing and operating iron ore mines.
And look, talking of partners, you've got a strengthening relationship with the federal government in Madagascar. You've been reporting on that to the ASX. Tell me about how things are progressing on that front. It's a very important relationship.
Since September, October last year, we've had continuing discussions and visits with the Mines Minister and advisors to the President and the Cabinet. I was there in mid-January, again had two lots of meetings over several hours with the Mines Minister, and look, they are fully aware of our project. They've identified it as a project that they see will come into operation in the near term, and are working with us to identify the items of work, the areas that we have to progress with different ministries to enable the project to become operation ready over time. Now, all very supportive.
Okay, so if we look at the checklist, you've got government on side, you've got institutions on side, you've got the board and management very supportive, you've got a major iron ore industry investor on side. On the other side of the fence, how's it going with potential off-takers?
The off-takers have all said they're waiting for the PFS. So that's why we are working very hard getting the PFS to be released in March, working with our engineering companies, environmental consultants and the like to get that PFS finished. Jason and I are working together in the coming days, reviewing the data, drafting up the announcement in readiness for that March release of the PFS. You would have also seen some ASX announcements over the last month or so where we've been releasing some of the activities and the progress in the various testing product quality areas for the PFS. So for the off-takers, they're waiting for the PFS. They want to see that, how it shapes up in terms of capital and operating costs and comparison to the scoping study. And from our point of view, the alignment with the scoping study is very strong. We don't expect any surprises.
Yes, and for that PFS, just as a reminder, that's for your Bekisopa project, a direct shipping ore startup mine, which will produce 2 million tonnes per annum for up to 5 years and maybe beyond. Given the latest activities you've done as part of the PFS is showing that mine life could be extended, tonnages could be greater, and grades could be upgradable. So, all very good news for those awaiting the outcome of the PFS.
No, very much so. Look, if you go back to the last couple of announcements since, say, December last year and into January of this year, the 24 drilling in the southern zone, 58 of the 61 holes intercepted high-grade iron ore, that will all be added into the updated MRE, which is due in a couple of weeks as part of the PFS. The mineral test work that Jason organised with the various laboratories, it confirmed that in the north, central and southern zones of Bekisopa, the lump fine split is 30% lump, 70% fines, with the lump grade at 65%. So the lump product is the preferred blast furnace feed material. We'll potentially get a grade and a lump premium for that 30% of the Bekisopa annual production, and fines grade at 61%, pretty much on the benchmark grade, low in silica and alumina. So product-wise, lump and fine split is very good. The recent announcement on upgradability, in the areas of Bekisopa along the 6 kilometre strike, we've got the DSO resource that's been defined from the last 5 drilling campaigns. Adjacent to that, either by the side or below the DSO that's been mined, is an intermediate grade material, 40 to 58% iron. It's in the weathered zone, so it can be mined without drill and blast, so low cost mining, and that upgrades after crushing and screening with a simple magnetic drum after the screen to produce a lump and fines product that is saleable. So from 40, 45, 50% iron is upgrading to 59% for lump and for around 61% for the fines. And that material, interestingly, has a higher lump proportion than the bulk of the DSO. So lump proportion at 70%. So we'll get a grade and a lump premium for that intermediate upgradable material. So that will all add tonnes and mine life to the PFS going forward, which is all very encouraging for the economics of the project.
Well, yes, the metrics certainly sound like they're muscling up and looking very appealing for any investors, I suppose, sitting on the sidelines who want exposure to iron ore. The AKORA story is sounding very appealing. The MRE, the PFS, certainly major catalyst. You'd expect an uplift in share price.
Very much so. We see that with the PFS as we progress the work with the government on outlining the pathway towards operations readiness. The work that I've been doing recently and Jason's been doing with the Port Ministry and the Roads Ministry, the RN7 has been announced that the RN7, which is the road national highway we're going to use from site down to the Toowoomba port area, is being upgraded over the next 2 years with funding from the World Bank. So that's very encouraging. We'll make that roadway far better for our haul trucks. The other element of work that has just been completed in the coming months is a bypass road from about 8 or 9 kilometres outside of Toowoomba, bypassing the Toowoomba township directly to the existing port. So that brings the existing port into play for shipment of our product, particularly in the ramp-up years, but maybe beyond that. And when I was in Madagascar just a couple of weeks ago, the Port Ministry shared their vision for the upgrading of the Toowoomba port and that included a bulk terminal for bulk commodity ships like the size that we would use for our product going forward. So in the PFS, we have two port options. One is considering the accessibility and utilisation of the existing port at Tullio.
So certainly it sounds like the Bekisopa project is shaping up very nicely. What I really find appealing about the project is you've got stage one, which will give you a nice cash revenue, and for off-takers, you offer the opportunity to give them, very high quality iron ore for blast furnace steel manufacturing. But if they stick with you, they can also get access to the next level iron ore that you'll be producing, which is the high quality DRI iron ore feed.
We actually have two projects at Bekisopa, which makes it a little difficult to market. The DSO, low capital, low operating cost startup, gets us in, generates the cash. Then as that DSO is mined, we move into the fresh magnetite rock, high grade, 32 to 40% iron, which upgrades to a very clean, high grade DRI concentrate, as you said, either for blast furnace pellets or for the greening of the steel industry going forward. So that concentrate will be sought after because it'll be better than 68% iron, 68 to 70% iron with very low impurities, less than 2%, which makes it a bit of a standout in this space and will demand a premium price as the iron and steel industry decarbonises in the future. So
I was going to say, at those numbers, certainly that explains why a lot of the world's steelmakers are looking very closely at the Bekisopa project. You've had a long track record in iron ore for the majors around the world, and behind you you've got Graham Hunt, former BHP heavyweight iron ore guy. So you really got the goods to make it all happen.
Now look, we've got wonderful experience, and Graham has broad knowledge from steel making when he first started his cadetship at BHP, through to being the president of iron ore for the world, which certainly was centred around Perth and the Pilbara in Western Australia. And with him and the discussions that we're having, it opens up opportunities for people to be aware of us and follow the project, particularly after the PFS is released in March, as we get into a more focused strategic investor discussions.
Well, the release of the PFS isn't far away. March will be here before we know it. Certainly, I reiterate, a very terrific opportunity for any investor that sort of wants exposure to iron ore to get in now.
No, very much so, Gareth. I think to finish off the discussion today, which is very much focused on Bekisopa, the DSO, the PFS, and all the good qualities of that project, it's also worth commenting on iron ore and the iron ore price. The benchmark price for iron ore today is $106 a tonne. If you look back, the average price for the past 9 years has been $100. So it's stronger than the average over the last 9 years, $106 for benchmark grade. And this is on the back of China, who in 2024 increased their imports of iron ore into the country by 4.9%. So they increased their iron ore imports last year to 1.24 billion tonnes of iron ore. It's phenomenal numbers. And that's on the back of 2023, where they increased their imports by 6.6%. So very strong demand for iron ore from across the world. China is still strong. Other countries with their investment into improving their infrastructure, particularly India, which is our near neighbour, is increasing their iron ore imports, but also importantly their iron and steel making, which all goes well for the whole iron ore story going forward.
Well, I look very much forward to the PFS being handed down in March. All the best.
Okay, no, thank you, Gareth, and appreciate the support of our shareholders, and good news to come in the coming months.